All right, so we're going to be talking about Vancouver. And the thing that just happened, and this is the talk of the town, because a lot of what happened with this budget announcement really is targeted at Vancouver and it's targeted at Toronto, because those are the two biggest markets in Canadian real estate by a mile. And so because they're the biggest markets, any changes that come into place target those markets. So the federal budget, we're going to talk about some of the key changes and the effects that they could have on BC real estate. And I'm going to back up my theories and predictions with some data, with some actual market research that kind of supports where things are going. So first thing they talked about was beefing up the first-time homebuyers credit. Basically, you can get up to a $10,000 tax credit as a first-time homebuyer, and you can pull $40,000 without a tax implication from your RSP TFSA. As a real estate investor, all this reminds me of is that it can be a really good strategy to partner up with a first-time homebuyer, because if you have borrowing power, if you've got capital, and you've got a first-time homebuyer that you know, trust, like, want to work with, well, heck, you don't have a better tenant than somebody that co-owns the property with you as a partner. And with CMHC, you can put 5% down instead of 20% down. So just food for thought. If there is a person in your life that is a first-time home buyer that you'd like to help out, that you think would make a great joint venture partner and that you'd like to do business with, this is a program that you can, in a roundabout way, take advantage of by partnering with a first-time home buyer. So that's and especially in markets that are so gosh darn expensive like Vancouver, that might be a way for yourself as an investor and for a first-time home buyer to get into the market when they otherwise might not be able to. Next, they're talking about ending blind bidding. I don't want to get too deep down the rabbit hole, but basically the way Canadian real estate works right now is that if an offer goes into multiples, you can't see what any of the other bids are. It's been like that for a long time. They want to end that practice to increase transparency. I think what it might end up, the idea is that because not every party involved in the multiple offer situation can see what every other offer is, it's unfair to the person that bids $100,000 higher than the next closest offer. And for other reasons too. So if all the bids are transparent, it means that the winning bid will only win by a small margin, but it might also mean that in races that are close and people realize how close they are, it's going to push certain bidding wars higher. It's going to bring certain bidding wars lower. I think that in terms of the actual pricing in the marketplace, it's not going to really shift what houses are purchased for in a significant way. I think for some bidding wars, it's going to shift what the final price is up. For some, it'll shift it down, and the net sum of it is going to be not a big impact, but it's going to make things feel more fair for consumers, and that's what I really think the positive impact is going to be. They want to reduce foreign demand for the next 2 years, and this is an interesting one because they basically want non-Canadian citizens and non-commercial enterprises. It's going to prohibit the purchase of non-recreational property for 2 years. My take on this is if you have a creative mind and you're looking at the restrictions here, you're probably already thinking about ways to loophole these restrictions. I mean, if it's, what does it take to classify something as a recreational property? How do you create a Canadian entity through corporate registration? I mean, I think that it's going to slow down some, but not most, foreign buyers. And when we think historically, I mean, Canada, every time the market gets hot, they just add a little sprinkle to pump the brakes on foreign buying. Some noteworthy recent examples are the foreign buyers tax, the vacant property tax. When these things came into place, I remember we were there. It was like a 2 to 3 month kind of mini slowdown, and then it was back to business as usual for foreign buyers. So I think this will just be another thing that kind of taps the brakes a little bit, but I don't think this is going to end foreign buying by any stretch of the imagination. Next, this is a really headline grabbing one because it's called AntiFlipping Tax, which sounds like a really big deal. It sounds scary. It sounds like, oh my God, everybody who's a flipper is like, oh my gosh, what's going on here? So let's talk about the way that it worked before. The way that it worked before was that the CRA typically had the burden of proof to figure out if a sell was a flip. So what that meant was if you as a flipper wanted to claim a capital gain or claim a primary residence, well, the CRA had to audit you to prove that it wasn't. So a lot of these guys were flipping on through. After the CRA, and this is going to be a big deal, is that if you resell a property within 12 months of closing on it, then it will be subject to full income tax. Now, by the word of the law, if you are buying a pre-sale and flipping it, you are always supposed to pay full income tax. If you are buying a house, renovating it, and selling it for profit, you are always supposed to pay full income tax. So it doesn't actually create a new tax. That's the key takeaway here, is that it makes it sound like this anti-flipping tax is coming into play. Well, no. All of us pre-sale buyers in Vancouver who have been flipping pre-sales and making money like crazy, you're supposed to be claiming that as income tax. And I know that a lot of you weren't. We know, it's okay. I'm not asking you to put up your hand and say it was you, but we all know. So because of this new resale rule, it's just an accountability mechanism to allow the government to make it easier to collect the tax on flips and pre-sale resales that they were supposed to be collecting the whole time. So I don't think that this is going to do anything to flipping in terms of slowing down flipping or making flipping not make sense. All it's going to do is make sure that, you know, all those sneaky sneaks out there not paying their full tax burden are now going to have a tougher time avoiding paying that tax burden. So homeowners can obviously apply for an exemption. So if like you actually bought that house as your primary residence and you actually had to move sooner than you expected, you're still going to be able to get a tax exemption. So that's not the end of the world. Next, this one came through quietly, but for those of you that have been paying attention, MCI Select from CMHC. If you want to talk about this, I can't get into the details of it in just a quick market update presentation, but this is a big deal. CMHC really wants to loosen up borrowing for energy efficiency, accessibility, and affordability. Energy efficiency, that's pretty obvious. I won't really define that. Affordability, also pretty obvious. What they mean by accessibility are things like elevators, wheelchair ramps, and stuff to make more properties more accessible to more people with accessibility requirements. So if you are willing to build or substantially renovate properties that meet energy efficiency, accessibility, and affordability requirements, you can get up to a 50-year amortization, up to 95% loan to value on loans, and they're easy to get. You only have a 25% personal guarantee offset. So what that means is, usually if you're borrowing funds from a conventional lender in the commercial sense, you'll have anywhere between a 60 and an 80% personal guarantee on the money that you borrow. So you borrow $1 million. If it's an 80% personal guarantee, you have to guarantee 800 of it. So if things go wrong, they can go after you personally for 800. 25% personal guarantee offset. That is incredibly low. That's a big deal. They're also offering interest-free seed capital. We're talking hundreds of thousands of dollars of interest-free seed capital to help these projects get off the ground. And there's also a rental construction financing initiative. So if you're a commercial multifamily buyer/developer, this is an insane program. I'm actually building a property right now using this sweet seed capital that we're going to flip into a 50-year AM with 95% loan to value. So if this is something you want to talk about, DM me, because this program is awesome. And this is, so let's get into it. Raising interest rates. Sorry, I'm watching the time, so I got a little excited and started talking faster. Interest rates are rising fast. This is no secret. Our main man, Keaton, and I did a really awesome Facebook Live. So check me out on Facebook talking about whether you should do fixed or variable. The thing that everybody's getting excited about is when anything goes up, we're like, oh man, is this going to cool everything off? Well, it's just kind of going back to where it was before. It might creep a little bit higher, but these interest rates aren't like unprecedented or insane. They're just kind of, we just had a little COVID break in the middle there, and now things are coming back up. So the real question is, have these changes actually cooled the market? Or is it business as usual? Well, the answer is kind of yeah. The market has cooled a little bit. So when we look at all of the major markets in BC, I mean, holy crap, this growth will make your head spin. Double-digit growth pushing as high as, 25, 40% in some of the markets. But what have we seen? The listing inventory from March 2021 to 2022, down across the board, 12.5 provincial average. And the sale to listing ratio, down by 10%. That means absorption. The number of listings that turn into successful sales is also down. So what does that mean? Fewer people are taking action. Yes, the prices have gone up, but there's less movement in the market right now because as soon as they announced the first interest rate change, people had this, oh my gosh, wait and see mentality. And this is the cold hard data of what people waiting and seeing looks like. Houses are sitting on the market longer, fewer houses are being listed, and fewer houses that are being listed are being sold. So what does that mean for you guys as investors? Like, what do we do about this? Well, we know that historically in BC, every time measures are implemented to slow the market, the operative word is cool, slow, not stall out and freeze. So we are going to have this nice little pocket for the next 3 to 4 months where people are going to chill for a second, and you're going to see things like multiple offers not happen for a little bit. You're going to see things like crazy fast sales slow down. You're going to see prices stabilize. You might even be able to, it'll go to a balanced market. So that's kind of the market cycle in BC, is especially Vancouver, as we go from insane sellers market to balanced market back to insane sellers market. So it's not like the sky is falling and the market's going to drop out from below us. That never really happens. We're not going to ever end up in a buyer's market, but it'll be balanced. So for those of you that have been waiting to invest, for waiting for the market to chill for a second so I can make a move, well, this is your market chilling, so you can make a move. So we're very, very excited for this to happen from a buyer's perspective. And when we, as investors, well, investors are buyers. We're buying property. So this is great news for us based on what's happening in the Vancouver market. Thank you guys very much. Rebecca, back over to you.